Welcome to the Market Front Lines. I'm Lyndsay Malchuk. Today we're entering a market that has been underestimated for far too long, and it's moving faster than most investors are prepared for. Namibia is no longer a quiet corner of the African continent. It's become a pressure point of opportunity where macro forces, resource discoveries, sovereign strategy, and investor psychology actually collide. Now, sitting with me is someone who has spent years dissecting these forces with a precision that investors rarely get access to. I'm joined by Rowland Brown, co-founder of Cirrus Capital and economist, a strategist, and one of the sharpest voices on how Namibia is positioning itself for a very different decade ahead. First of all, welcome to the Market Front Lines, Rowland. It's so great to sit with you today.
Thanks a lot. Thanks for the invitation.
Now, Rowland, let us get straight into it. You have a front row seat to the structural changes underway in Namibia right now. So growth is accelerating, inflation is holding steadier than many expected, and capital is flowing in directions that were unthinkable even 5 years ago. So when you look at that macro picture right now, what's the one pressure point that global investors are not paying attention to, however, they really should be watching more closely?
Yeah, I think Namibia is very interesting at the moment, and I think it's probably been quite interesting for quite a long time. It's very, very different from what people expect when they think about Africa. I mean, we have world-class infrastructure, much better than many advanced economies, really. And we've got, great peace and stability. We've got a very low levels of crime. We score zero on terrorism indices and things like this. So Namibia is very different from what people's expectations are when it comes to Africa. And we sort of talk about it as the sugar-free version of Africa. It's the light version. And it works very well. I mean, the country functions well for the most part. Obviously, every country has some issues, but generally speaking, Namibia works pretty well. And we've got some very, very important and very good sectors of the economy that really underpin the structural performance and the kind of long-term stability of the country. So our mining industry is world-class, lots of big listed companies operating here and contributing significantly to export earnings, contributing significantly to the fiscus and similar. And then more recently, since 2022, there have been large oil discoveries off our coast by the super majors. So Total Energies and Shell both made oil discoveries, and subsequent to that, there have been discoveries made by Galp, discoveries made by Rhino Resources and others. And it seems in our Orange Basin on the border between Namibia and South Africa, pretty much wherever you stick a drill, you find oil at the moment. So it certainly looks as if this is going to be very transformative. And because it's quite a small economy, the nature of these discoveries relative to the size of our GDP means that we're going to see rampant growth over the next few years. But it's also more interesting in the sense that the Namibian rand, our currency, is pegged 1-to-1 with the South African rand. And over the last few months, South Africa has moved its inflation target from a previous band of 3 to 6% to a target of 3%, which means that we're going to be seeing relatively low inflation in the region going forward. And this is at a time when inflation is expected to pick up elsewhere in the world, particularly in the US and similar. And the implication of this for us is that we're likely to have a very stable exchange rate over the next few years, which is just another, great benefit that goes along with all of these other ones that I mentioned when it comes to investing into Namibia. There's so much less risk than people realize.
Wow, I mean, there's a lot that's happening that so many investors are completely overlooking right now. I want to build further on that, actually. There's another blind spot. Now, Namibia, as you mentioned, has become the quiet epicenter for resource discovery. So from the copper to the uranium to the growing conversation around strategic minerals, investors are looking for clarity. They're not looking for noise. And having said that, as you mentioned, oil and gas are now reshaping expectations altogether. So with your boots on the ground there, what's the real story behind the exploration surge, and how should investors separate the signal from the actual speculation?
Yeah, so Namibia has been a mining jurisdiction for a long time. And we've had sort of mining policy that's ebbed and flowed, but we've never done anything really stupid when it comes to mining policy. I think many other jurisdictions on the continent have got it quite badly wrong at times, whereas Namibia hasn't. So we're far more at the mercy of commodity cycles than we are at the mercy of policy cycles. And so that's a lot more predictable as far as investors are concerned. I mean, obviously the commodity cycle is complicated, but we don't add that layer of complexity of bad policy or unpredictable policy on top of that. And over the last few years, I mean, we've seen exploration and significant exploration investment into some known deposits that have been known, for 50, 60 years, and drilling those out and just increasing the known quantities of the various minerals in these deposits. And in other instances, making new discoveries. So a Canadian company, a listed Canadian company, Astino Resources, made a brand new gold discovery and took it from nothing through to a mine that's now being built in a very short period of time. Relatively easy permitting, environmental law, social sort of contract stuff. And now the same individuals behind that are busy with a very large copper deposit that's been known about for a long time, but has never really been drilled out properly, and they're now in the process of drilling it out. That will become a mine, I think, fairly soon. A Canadian outfit, Weir Gold, they've made a significant gold discovery in the middle part of the country, and that's now applied for a mining license. And we have 2 new uranium mines. There's 3 operating uranium mines at the moment. We're one of the biggest uranium exporters in the world, but at least 2 new uranium mines likely to come up in the next couple of years. 2 of the 3 potential have applied for mining licenses already, which means they're quite far down the process. And I mean, Namibia is, I think, very, very well positioned for what we see as a sort of nuclear renaissance that's taking place at the moment as well. So all of this is onshore mining, and this is, long before we talk about what's happening offshore with the oil discoveries. But the onshore mining is really going from strength to strength. And then, many of the older mines, B2 Gold, a Canadian listed company, has a big mine here. And then QKR has a big mine here, gold mine, and they're both expanding as well. And then the old Rio Tinto Rossing uranium mine, it's one of the older mines in the country, is now extended its life of mine out until at least 2040. Just a few years ago, 2018, it was sold by Rio Tinto, 2018, 2019. Was sold by Rio Tinto, and they struggled to find a buyer. But with the uranium price picking up, global demand for uranium going the way it's going, they're just going from strength to strength and expanding. We're also a big diamond producer. Unfortunately, the diamond industry is going the other way a little bit with synthetics and similar. But we're very high quality alluvial diamonds. So as a result of that, we haven't been quite as hard hit as Botswana, our neighbor. And we're much more diversified. So, we sit in a much, much better position. I mean, the gold mines are now the biggest. One of the gold mines is the biggest taxpayer in the country, taking the place of the diamond mine, one of the diamond mines in the past. So, we're much more diversified, much less at risk of a single commodity price.
Well, first of all, those Canadians, they really do know what they're doing over there. Second of all, I want to continue on with this mining topic if we can. Developers are moving fast. The valuations, they're stretching, and the global shift toward energy transition metals is pushing Namibia into a very different league right now. So with every boom, we know also carries a shadow. Where do you see the risk that no one wants to talk about, especially as early entrants try to lock an advantage before production even begins?
So, I mean, there's with any developing country, there's some policy challenges, and I think Namibia is no exception there. We have a country that has a large number of people who are unemployed and so on, and so there's constant pressure to see how can we improve the lives of those left behind, and that's extremely important. But with that, obviously, comes bits and pieces of populist pressure. Namibia has never really been a country to take those populist pressures and do silly short-term things, and I think that's very, very important. And I don't think it's likely that will change anytime soon. But obviously, I mean, policy is your big point of uncertainty. That said, many developed countries also struggle with policy uncertainty. And I think when it comes to this, if you look at Namibia on the Fraser Index over time, we're pretty predictable. And the other thing that's, I think, very important here is that the politicians that are involved in this space are very accessible. They're people that want the best for the country. They're people that want to meet with investors. They want to meet with the industry. And the Chamber of Mines here is fantastic. I mean, really, really well-organized group. And they represent the mining industry well. They represent the interests of the industry, but they also represent the interests of the country, and they make sure that a good balance is split and achieved, and that ensures sustainability over time. So I think that's very important as well.
Absolutely. That's such an important point that, so often is very, very overlooked. Let's shift the lens here just for a moment. Property markets across emerging economies are behaving in a very strange way right now, and Namibia is no exception to that. So, you've spoken before about structural barriers, household debt pressure, and the mismatch between valuations and actual demand. So, when you look at the property market today, what's the truth behind the numbers, and where does the market break if conditions tighten?
Yeah, so the property market's an interesting one here. As you said, we've done quite a lot of work on this over the years, and we have quite a nice little research portal that you can get access to this work through if you're interested in Namibia. But in essence, I mean, one of the big opportunities that we see here at the moment is from sort of 2015 until, just after COVID, we had quite a difficult period. So we had been through a big commodity boom up until sort of 2015. The region had done relatively well. In 2014, 15, we started to see some commodity, or from in the instance of uranium already before that, but we started to see a bit of a commodity price slide. Namibia also at the time had a lot of economic interaction with Angola, our northern neighbor, and then Angola came under a huge amount of pressure when the oil price collapsed. And so a whole combination of things happened in 2015, 16 that caused an economy that had been growing at 5 or 6% for 5 or 6 years to slow to around 1% growth. And then we had 1% growth up until COVID. And then obviously COVID did a number on our economy, the same as many others. Post-COVID, with the oil and gas activity, with the resurgence of mining, with a very positive movements on the gold price and on the uranium price and on copper prices and similar, we've seen this big resurgence now. But what happened over that sort of 7 or 8 year period between 2015 and say late 2022 is that our property market basically stagnated in nominal terms. So in real terms, we actually saw property price declines. And what we see now is that the property market is in a place where, in many instances, valuations are actually below replacement cost. And at the same time that we see this, we also see an imminent influx of foreigners into the country who come with a lot more spending power, but also quite a big growth resurgence. And so the implication of this is that there's just going to be a huge property tailwind. Now, what we also have from the supply side of property here is a number of kind of bureaucratic inefficiencies that make turning, the ample land that exists in Namibia. Namibia has got the second lowest population density in the world, just 3 million people spread over a huge area. But the ample land, taking that from basically virgin state through to residential units or industrial units or so on is quite laborious. And so while we expect to see a big demand surge over the next couple of years, we're not seeing the same supply response or the supply response in the same sort of period of time. And the implications of this is just that we're going to see property prices lift quite a bit in our view over the next sort of year or 2 or 3 or more. And that's obviously we talk about property as if it's kind of a homogeneous thing, which it obviously isn't. But there's some areas where I think there's particular opportunities. So the coast, we've got one of the best deepwater ports on the west coast of Africa, certainly the best in the southern part of Africa here. And that's a huge gateway into the sort of landlocked interior of Africa. So Zambia, Zimbabwe, Botswana, even into the DRC, southern Tanzania and similar. And we've got some very, very important corridors that go through there. And then and that coast is now also going to see a big lift as a result of the oil and gas activity. But then our uranium mines are also near the coast. So that coastal property, we've already seen absolute rockets under it. And I think that's likely, it could well be the case that continues going forward just because of supply constraints while demand's picked up so much.
Absolutely. Let's keep unpacking that a little bit further, Rowland. I want to talk banking here. Now, bank valuations in Namibia are interesting right now, to say the least. Some investors say they're undervalued considering earnings resilience. Others are arguing that they're priced for conditions that just actually won't last. So you add that government debt dynamic on top of that, and the picture gets even more complicated. So when you put all these pieces together, what do you see as the real opportunity inside Namibia's financial sector as the next cycle takes shape?
So, I mean, I think that there's anyone that looks at the Namibian banks, Namibian banks make up a big portion of the available listed equity in Namibia. There's banks, there's breweries, some property companies and similar. But the banks especially, I think, are phenomenally well positioned for the growth that we're seeing at the moment. And they're also very defensive. So if you go and look at what happened to bank earnings during COVID, for example, they had a downswing, but it wasn't too dramatic. I mean, they didn't go anywhere near loss making or anything like that. They had slight reductions in their profit. And on a backward looking basis, on a trailing basis, I mean, many of the bank's price earnings ratios are very low. So, well under 6 times. And on a forward looking basis, obviously quite a lot lower. And we don't really forecast sort of an oil and gas boom in what we do. No company has made a final investment decision yet. Total Energies is the closest and is likely to do so sometime during the first half of next year. But with that will come a pulse of economic intensity that will just, I think, see a big lift in overall bank earnings. The banks at the moment are sitting on, and they're very, very well run and managed banks. I think this is also very important. Many of them are local subsidiaries, effectively, of big South African banks or African banks, Standard Bank, FirstRand, and similar, Nedbank. But of the listed banks, these price earnings ratios and the price to books are very, very low based on what we see at the moment. But they're also sitting on a lot of liquidity, a lot of surplus cash. So as the economy starts to pick up, or as the pace of growth accelerates, they'll be able to deploy that cash, remove that cash drag from their income statements or their balance sheets at the moment. And then going forward, we expect to see very significant earnings growth should we see a final investment decision. And obviously, the implications of this is just that you're buying these banks on what are very, very appealing valuations on a backward-looking basis. So if things just continue as normal, very appealing. I mean, dividend yields on the banks often in the double digits as well. And the potential for growth, absolutely enormous. And specifically, one of the banks, Standard Bank, is also the kind of banker of choice for the uranium industry, especially where Standard Bank has a Chinese shareholder in the Standard Bank group. And many of the uranium mines in Namibia are Chinese owned. So as they expand, as they grow, they're capital hungry. There's lots and lots of demand for funding from these financial institutions in that sort of manner. So from the existing onshore mining industry, but also the general activity that we expect to see going forward as a result of oil and gas and other activity just adds fuel to this fire. So generally speaking, we're very positive.
Well, there's some strong points that have been brought up today. And Rowland, I know that's all the time we have. However, I enjoyed actually learning more about Namibia's market. And I would love to actually have you back just to continue this conversation and learn some more. So thank you again for joining us.
Anytime. Thanks a lot.
Again, that was Rowland Brown, co-founder of Cirrus Capital. Now, if you want to understand Namibia as it is and not how it looks on the surface, you follow the money and you follow the people who can analyze it without fear. You can find more at cyrus.com.na. I'm Lyndsay Malchuk with Apaton Media, and this is the Market Frontlines.